Most people think the tax code exists to take their money. That is not true. The tax code is an incentive map. It tells you exactly what behaviors Congress wants, and it pays you for doing them. The default rate is not the only rate available. The default rate is the punishment for not reading the map. Every reduction in the code is a reward for behavior Congress wants. Buy a building, hire workers, generate energy, train apprentices, fund retirement, give to charity, develop a property, employ veterans. Each one is a line in the code. Each one is a deduction or a credit. Each one was put there on purpose by a sitting Congress that decided that behavior was worth paying for. If you do not read the map, you pay the default rate. If you read the map, you pay what Congress decided you should pay for the behaviors you actually do. That is not a loophole. That is the system working as designed. Here is the test most owners get wrong. When Congress writes a deduction, who is it written for? Most people think it is written for the rich, or for corporations, or for someone other than them. That is wrong. Every deduction in the code is written for whoever does the behavior the deduction rewards. Bonus depreciation rewards capital investment in productive assets. If you buy productive assets, you get the deduction. Section 199A rewards qualified business income. If you have qualified business income, you get the deduction. Section 1031 rewards holding real estate for investment and reinvesting proceeds. If you hold real estate and reinvest, you defer the gain. The Opportunity Zone program rewards investment in distressed areas. If you invest in those areas, you defer and reduce the gain. The Research and Development credit rewards developing new products and processes. If you develop them, you get the credit. Each one is open to anyone who does the behavior. Now, here's the part most CPAs do not explain. Most owners qualify for incentives they have never heard of. Not because they are doing something special, because Congress wrote so many incentives into the code that almost any business activity hits some of them. The hiring credits, the cost segregation rules, the bonus depreciation windows, the retirement plan contributions, the accountable plan reimbursements, the home office deduction, the vehicle depreciation rules, the QBI deduction tiers, the charitable bunching strategy. Each one is a line in the code, available to anyone who structures their activity to hit it. And almost no business owner uses more than 3 of them, because nobody read the map. Their CPA filed the return based on what already happened, not based on what could have happened. Their attorney drafted documents based on what was asked, not based on what was possible. Their financial advisor allocated assets based on the goals discussed, not based on the tax code rules that change which assets to hold where. The map was sitting on the table the whole time. Nobody opened it. OBA, Public Law 119/21, signed July 2025, made the map bigger. Permanent tax brackets locked in the rate structure, restored 100% bonus depreciation, reopened a major deduction window. Section 199A made permanent, kept the QBI deduction in the code without sunset. Each of those changes added new incentives or preserved existing ones. The default rates stayed the same. The map got bigger. Owners who read the map after OBA pay less. Owners who do not pay the same default rate they always paid. The gap between the two grew. An LLC is a state law entity. An S corporation is a federal tax election. Both are tools the code provides for owners who read the map. Neither is a loophole. Both are explicit congressional incentives for specific behaviors. The same is true for cost segregation, opportunity zones, defined benefit plans, accountable plans, and 100 other tools. None of them are loopholes. All of them are written incentives. All of them are available to anyone who does the qualifying behavior. If you are paying the default rate, you are not being punished by the tax code. You are choosing not to use the map. The choice is not between paying tax and avoiding tax. The choice is between paying tax for behaviors you are not doing and paying tax for behaviors you are doing. The first choice is the default rate. The second choice is the strategic rate. Both are legal. Both are written into the code. Only one is what Congress actually intended. If you have been paying the default rate without ever reading the map, comment taxes or DM me and we will walk you through how a tax code review works.